Hey, what's up? If you are watching this video, you're probably a realtor. You're wondering, what the heck is this Sub2 deal I just got, or a wraparound deal, or a seller finance deal? Maybe these terms are a little unfamiliar with you. We got a whole bunch of other videos explaining what those three are, but this video is built for realtors who are maybe presenting an offer like this to their clients and covering a lot of the common concerns that they have. The reason is I am a realtor in Texas, and I actually sold my house subject to financing to the future buyer. In other words, I sold the house, I had an existing loan, that loan still remains in my name today, and I no longer own that property. Now, why did I do it? I got a lot more money for it, and it was a sweet deal. So now, of course, we buy houses this way, and we structure things, and I covered some things to help you as you present your offers to your clients. So we're going to cover three things here today. Top concerns for realtors. Are you going to get paid? Yes, yes, yes. Well, you should get paid if it's structured right? We're going to cover how to make sure that happens. Number two, what are the top seller concerns? You need to be your fiduciary responsibilities to your clients. So how do you represent them and explain everything to them when they're getting an offer like this? And then number three, why would your seller do it? So let's dive in. Okay, here's the top concerns for realtors. Number one, will I get paid commission? Come on, I did all this work. The reason you're seeing this house is because I listed the property. I figured out all these other issues and so on and so forth with the property. The answer is yes, yes, you should get paid for the marketing services you provided, right? So will I get paid? Yes. The key thing you want to see in your buyer when they're coming to you is that they're bringing some cash into the deal to pay that commission that you're rightfully entitled to for doing that work, right? So yes, we do, when we write offers for these, we put commission in there in terms, or enough money in there for the seller to pay the commission, hopefully some money for the seller as well right away, and then there could be some over term depending on the structure of the seller finance that you're doing, right? So yes, you get paid. Number two is it legal? Yes, it is legal. Take a look at your TREC 1 to 4. There is a section right near the third-party financing checkbox for seller financing addendum checkbox. Look up the TREC promulgated form, which I can never say that word right. Hopefully you can. Anyways, the TREC promulgated form that walks you step by step through how to fill that out. Now, there are some people that will use a different type of contract for seller finance, or especially getting into wraps, or maybe a subject to contract that really spell it out for your client and disclose a whole bunch of things. And an attorney preps those documents and gets that all squared away, but it just makes it super simple so that they understand, like, hey, in that situation, the loan will still remain in your name and all the risks and such that go to that. We're going to cover that in just a moment, so hang tight. But anyhow, TREC promulgated form is there. It's completely illegal, and it covers this in your continued education courses. I know you and I probably both forgot a lot of the things that we covered in those courses, especially when we're getting licensed the first time. It was all about passing that test, and then you had to learn how to do this business, which is a whole other story, right? But that is covered there, and they cover all of those types of loans in those classes. So yes, absolutely legal. Fannie Mae, Freddie Mac outline in their documentation as well how to structure these, how they can be worked, etc. So these are all being structured in such a way that they can occur, right? We're going to cover the risks down the road here in just a second. Another concern the realtors have is timeline. Does it change my timeline? This sounds like a super complicated deal. I don't want to have this drag out for like 45, 60 days. I need to get this done and moved on. Actually, these deals can be done much faster than a lot of other deals because they don't require the number one timeline slower in this transaction, which is a new lender, right? So if we have a seller finance deal and we're structuring the paperwork fast and we're dealing with a title company and attorneys that know how to do this, this can be done in a matter of a week or two, right? It can be super fast. Another thing, as I mentioned here, title company, it's important that you have a title company that knows and understands how to work these deals. A lot of title companies do fantastic business doing retail deals, and 98% of the deals are not this, right? So you need to have a title company that knows how to structure this, how to work this. And the nice thing is, after you filled out your nice little short, sweet TREC promulgated contract or a short, sweet contract for purchase by an attorney that spells everything out nicely in simple terms, you're going to have an attorney who's going to actually write up that bank note or how that structure is of that loan, the seller finance structure in the deal, right? So they'll write out all the details based on the simple contract that you filled out. You don't have to fill out all of those details. Now, I want to cover concerns for sellers. Okay, so again, you're probably the realtor watching this video, but you have to be looking out for your client. So let's talk about your client now and some of the concerns that your client may have when they're looking at a seller finance deal, right? So top 2 concerns are default. What if the dude just stops paying me or stops paying my mortgage if I'm selling it subject to my existing mortgage? That's pretty risky, right? I had the same concern when I sold my house subject to, and here's how it works. If they default on the payments, because you have essentially a mortgage on this, you can structure this where you have the deed of trust, right? You can, as the mortgagor lending out that mortgage, right? Default, you can file a foreclosure on them, and in Texas, it's super fast. It can be as little as 42 days and up to 60 days to foreclose on that house, where you're, boom, it's all cleared out of your name and that's paid off, right? So super fast in terms of turnaround time on default. So that is what happens in Texas. That's the process. It's not very complicated in Texas because it's non-judicial system for foreclosure, and it's much easier in Texas than many other states, right? I have a whole bunch of other videos, by the way, on foreclosure, how to do it, how to avoid it, all that kind of stuff too, and happy to share those with you. Due on sale clause is another thing. When you got your mortgage, if you're selling a house with your existing mortgage in place, that mortgage is going to stay in your name, okay? There's a little clause in there that says the house or the loan balance can be called due on sale. In other words, the payments are accelerated. So if you owe $200,000, for example, they say, hey, that remaining balance of $200,000 is due now. I don't have that. The guy bought it from me. This is an awkward situation, right? So how do you get out of this, right? Number one, that buyer can show a way to either cash out or refinance, restructure this, right? Those are the easy ways to do this. There's a couple different types of loans that can lend really fast, 48 hours, to help through that situation that we can look at. And then number two, I asked an attorney on this, like, hey, attorney, I'm selling my house subject to, what happens if this is called and I'm stuck here like this, right? And she said, well, typically there's only 2 scenarios that would trigger this to happen. Okay, number one is in the transfer process. When you transfer a property over to another person and that deed, that buyer, right, someone bought my property, they get an insurance policy on that property. And we actually did this the wrong way. Now I know how this works and how to avoid this, but when they get in that insurance policy, they need to put me as an additionally insured person on their policy. If they do that, the bank sees it, acknowledges it, good, move on, right? If they don't, the bank's going to contact them and say, hey, the policy you have on this, it's not with the mortgagor name or the mortgagee name on there, so therefore you need to adjust that. And they actually reached out to us. They basically acknowledged, hey, we know you transferred the deed, and they were fine with it. Even though we messed up on our house, they were fine with it. But that's something to keep it smooth. Just make sure all the names are on there. Boom, smooth sailing in terms of that. The second case is when you are maybe really behind on payments, right? You're maybe facing foreclosure, you got $20K in debt there on that mortgage, and all of a sudden, all that debt gets magically caught up, and then they realize that there was a deed transfer there, right? And so sometimes they may call that loan due on sale. It's extremely rare. I personally don't know any investors that have had that called due on sale. I mean, I've heard of like a few of the big shots that buy like thousands and thousands of them, have maybe a handful called over time. But It's very rare. So some things that the attorney recommended we do is like, hey, if we have that situation, just wait a few weeks to file that deed and make sure it's all registered appropriately to avoid any trouble with it, right? But again, there are multiple ways to resolve the situation, and there's other things we can dive into, but from payoff, refinance, and other things to structure to avoid that due on sale clause being an issue. Keep in mind, hopefully the offer you're getting has some cash and some skin in the game so that they are aligned with the interests of your seller to ultimately protect the seller and keep that property, right? So awesome things. Why would a seller do this in the first place? So let's look at a few scenarios where your seller is looking to actually sell or finance. Like, who would do this? Why would they go through all the hassle? Why deal with all this, right? There's a few clients out there that you're probably serving right now that may be a good candidate for this because of specific life circumstances. One, you all know that seller that just thinks their house is the most significant, amazing house in the entire block. They just want too much money for it, right? So if they can give better terms to an investor, now that house makes sense. If I can get a 3% interest rate, my payment is low enough to cover rent plus some repairs and some other things like that on the property management, etc. Wow, all of a sudden that property and that price point look really attractive to me as an investor, but I can't find good deals and interest rates right now because it's 2024 and investor rates are 8-9%. It's just, it doesn't work. It's finding a cash flowing property is super hard, right? So that could be one scenario. They just want too much money. They're not gonna negotiate, right? Number two, we see this a lot right now in 2024, especially in new construction areas. This is getting hammered hard, where in the new construction homes nearby, if they bought a house in 23, 22, if other buyers are looking at that same neighborhood, they're going to go to that new construction because they can get better interest rates. They're buying down points, all sorts of stuff. They're doing lender and purchase deals. You can't compete with that as a listing agent. It's really hard to move a property and even help them break even, right? Like if they have, let's just say they paid, I don't know, like $400K last year, right? And it's gone up, now it's worth $420, let's just say, right? Well, if they sell, they're gonna have at least $30K in commissions to you, title insurance, other things, concessions probably they're gonna be asked for from the client. It's gonna be 30, 40, could be $50,000 that they are gonna have to pay to move for this, and they're gonna be upside down on that property north of $10,000, right? Nobody likes to be upside down, first of all, at all. And furthermore, so they may not be in a situation where they could. Maybe they lost a job, maybe they have a life circumstance that is forcing them to move back with family or somewhere else, and they don't have a choice. They're either gonna face foreclosure or they need to sell, right? And so this can be an amazing option for those people who bought in the last year, 2, 3, the market just hasn't quite appreciated enough to give them the equity they need to sell and even just break even, right? If we can come in there and offer $410, for example, $415, $420 or something like that, cover your commissions, cover the expenses that they have, hopefully put a few $1,000s in their pocket in that scenario as well, then we're looking at a whole different approach to the problem, right? It actually pays them instead of losing money and they get a deal done. So that's awesome. The other scenario is when your seller says the R word. You, as a listing agent, know exactly what R word I'm talking about. Oh, I'm thinking I might rent it. Do you know how to do that? I've never managed a property before. And your heart just sinks. You're like, oh my goodness. You don't even know how much money and time I have spent on your listing, and I'm going to lose this all now, and you're going to rent, and I might make, I don't know, $500 off of this. That sucks, right? So when you hear the R word, the rent, give us a call and bring us a deal where we can look and make you an offer on your property as well. Hopefully this helps you cover some things. Yes, it's legal in Texas. Yes, it's a lot easier than a lot of you think. And we are happy to help answer details on all the processes, etc. that you have there. And for your seller, they have some pretty good reasons to look into this. We can also help talk to them if they have concerns on how to structure these deals. Keep in touch, reach out to us on our website, give us a call. And if you're an investor wanting to do deals like this as well, give us a holler. Happy to help you get started.